We'll get started in a minute, as soon as some stragglers come in. Well, we have a directional indicator on a 5-minute chart. Much prefer the 15-minute chart, but it was just confirmed over here. So if we get a little bit of a dip down in this area here, I might take a long against the low of the day. And if you notice, the take profit would be below this preceding line. I said in a market like this, I much prefer to see a 15-minute chart confirm a low. So I'm debating whether I should play this directional indicator or not, but it is a directional indicator off the low of the day on a 5-minute chart. We just had some data came out, consumer confidence, which I think spiked up last month, came down well below expectations, while new home sales outpaced expectations. A market that's really hypersensitive to any data coming out. Equities are flat, basically. The commodity currencies are weak. I'll go over it in a second. Oh, I'm going to play a directional indicator, and we'll see how this plays out. So now we're long at around 99. Take profits around 11. They said I much prefer to play a 15-minute directional indicator, but in this case, we'll take a shot at it and see what happens. Now, if you look across the board here, and you go down every currency, 15-minute chart, I said this is purely a contra trade off of a directional indicator on a 5-minute chart. But if you stick with the 15-minute chart, you would be short. Same thing on the pound. Canadian dollar, all red. The Aussie dollar, all blue. And I'm going to do this currency over here, the Canadian yen. And why I'm going to do that, because Michael put on a trade earlier. And I'll show this to you in a second. Okay, I hope you can see this. This is a 1 hour, I believe it's a 1 hour Canada yen chart. And if you look at this chart here, you can see it's a clear, amazing trader trade. What you have, he went short, I think at around 98.72. Stop was above, I think it was 92.96. And take profit was somewhere down in this area over here. And why was amazing trader trade? You had 3 blue amazing trader lines. You had a 4th line over here. I believe he went short somewhere in here, the stop above here. And you can see how this trade worked out, because I'm going to go to a Canada yen chart in a second. So this was his trade over here. And let's look at Canada yen here. We'll go to his 1 hour chart. See in a 1 hour chart, what do you have? This was his chart. And you can see why he went short and why he played the amazing trader and why the 15-minute chart is more important probably than any other chart if you're day trading. You can see right here how we are moving to the downside. You want to play it again here. You'd have to put your stop above this level here. You take profit, requires a new low for the move. We look at dollar yen, which is lagging. It's gaining on all of its crosses. So if you look at any of these currencies here, euro dollar, foolish to trade off a 5-minute chart and a directional indicator, especially when you have this strength of the move. Dollar Canada, maybe trying to find a bottom, but running into resistance over here. I'm sorry, that's sterling. Here's Canadian dollar, no sign of a bottom, and you got euro dollar here. You want to see what we got? The target in euro dollar now is 1.0965. It's on the 15-minute chart. I mean the 4-hour chart, and it's on the 1 hour chart. 109.65. So these blue lines here, we had a trend line here in the 1 hour that's been broken. And the market is now pointing to the downside. So somewhere in here, you probably find support. The question is, you base it on the shorter term time frame, or you wait for the 15 minutes to turn when you have such a strong move. Now, if you look at your dollar, I'm going to show you something else that came out earlier. Look at the 4-hour chart here. We failed at this key line, but it's really hard to switch gears. I'll be the first one to say it. You come in after being dying to find a place to go long yesterday. You come in and your mindset is, I'm going to look for a place to go long. You turn around, and next thing you know, the thing is moving lower. And at every pause, it looks big. And that's been true in almost every one of these currencies, certainly in sterling, certainly in the euro. Right now, these markets are liquidating. Liquidating markets, you tend to get a little bit of bounce, a false move, and then we move to the downside. I said euro dollar, but comes down somewhere into this region over here, that 109.70 level or so, stop below 65. I might take a shot at that purely from an AT preceding line perspective on a 4-hour chart. Let's see if we can find something else. Maybe we can trade here. The market is moving. But from an AT ladder trade, everything's pointing to the dollar upside. We have liquidating markets. Equities just got slammed. Here's your S&P 5-minute chart. It was in a range all day, and that just got hit. So we're in a risk-off market right now. And the key here is, if you want to go with it, is to find some place where you can go long dollars. They said, as far as the euro dollar goes, we come into that, anywhere come into that 109.65, where there could be stops, but I think there'll be support. That would be the region I would look to go long. But once again, when you're in these strong moves, and this is a good example, illustration, for example, on the euro dollar, you would have had a directional indicator over here. You had one over here, maybe. You definitely had one over here. And normally you would have moved into this range here. But I guess with the 15-minute and the overhead resistance so strong here, trying to pick a bottom is not the easiest thing to do. And you can see why we prefer the 15-minute chart. And sometimes you get cute, you try to trade off of a shorter time frame and catch a turn. And that'll work 50, 60% of the time. But when you're looking for a directional indicator off the lower high of the day, the 15-minute is a much stronger indicator to use. Now, while I'm sitting here looking, if anybody has any questions, please ask them. Because right now we're in a momentum move. And if you're not on, you're almost forced, like I'm looking at right now, to pick a level or a buy area in the case of the euro dollar. Because I know you could buy against 109.65. And the main reason is the preceding line. And that's where the preceding lines come. It's on a 4-hour chart. And really, it's on a 1-hour chart. We had a little correction in here and here, but this is really the base of the move. Another interesting one shows you how weak the Aussie New Zealand is. That's a nice trade here. Maybe we come back into this area here, we could put a sell on. The market's probably going to go short ahead of Aussie inflation tonight. So how do we sum it up? I guess yesterday the market was all U.S. interest rates were coming down. German rates were lagging. Today, German rates are keeping pace with the U.S. So the euro's lost some of its luster. We had some action in euro sterling earlier that pushed down sterling at the expense of the euro. Euro went bid on it. They said, I'm tempted to buy only because I can't sell. And that's a very bad reason to do something. I know we're coming into kind of the support region here. An AT trade tells me you got to be short with a stop above this level over here. If I revert to longer term charts, I could use this as my key support area. And it almost worked like clockwork. We started here, went right up. We're coming right back towards this line. And that's your preceding line. This might be more significant probably, but that's really the base of the move. But just using a preceding line here, and a 4-hour chart, it comes in right over here. So if I was to buy, it'd be something like this. The goal here in this room is to look for AT trades, not force trades. Do we have any questions here at all? None yet. And the one currency that's getting the flows today is the yen. So I'm not looking to catch a falling knife here. As I said, sometimes it's very hard to switch gears, even though AT is telling you what side to trade. Clearly, your dollar is pointed down. Dollar yen is kind of sideways to weaker, and its focuses on its crosses. Let's see, sterling. I'm just going to look to see if there's any opportunities here. See where this level is over here. In each case here, if you want to jump on, you're counting on new lows or new highs for the dollar on the day. Here's euro sterling. It's topping out over here. We do have a directional indicator. So that might look tempting over here. S&P, 15-minute. Looking really weak. Make Michael happy. And here's the euro dollar here. So right now I see two possibilities. I see a directional indicator in euro sterling. We broke the preceding line here. So we're really in a bounce trade. So on this cross, this is actually a bounce trade here. We broke the preceding line over here. We're in a bounce mode here, and we now have a directional indicator. So maybe if we come into here, we could put a trade on with a stop above here. That would be an amazing trader trade. Bounce trade, broke the preceding line. We do already have a directional indicator in. I like a bounce trade when you bounce and then you form a directional indicator. That's more of a failure. Let's see where this is. So we would have to put a stop in. We were going to sell here above 88.95 and take profits all the way down here. So on this cross, with London going home, we're just going to watch it for a while and see what happens. But as a setup, make it very clear, this is your bounce trade. Broker preceding line, you have a directional indicator. Now, as I said, if you're looking for a real stronger bounce trade, this was broken and then we bounced up to here afterwards. That's a great trade because you put your stop above here, a failure creates a directional indicator, and then you move down. So I hope that shows you the difference between the two trades. In one trade, you're breaking a line here, hoping we come back up again, put a sell on. On the other hand, if you break it and then bounce, that failure creates the directional indicator, and then you got a much stronger position in, but the market's going to then move down as it did here and probably hit your target. Now, if I could explain what a liquidating market is, it's one of my favorite terms. A liquidating market is a market where people are no longer positioning, they're getting out, and each new progressive low, and that's what you see. And I really didn't pay close enough attention to, for example, in the Eurodollar, each successive bounce up is being met with selling. And each time you make a new low, you're liquidating longs from, in this case, from the day before. And that's a liquidating market. It's one of the hardest markets to trade, but it can be quite rewarding if you follow the ladders. Because each rally is going to fail unless you take out the high of the day here. Okay, so now we're coming into, let's look at a shorter term chart in this. 1 minute. You got a directional indicator in 1 minute. 5 minute, there is no directional indicator, but there is a potential bottom based on that, the key level being 109.65. I don't want to punt here. I'm just scalping for myself. I might be buying down here. But we know this directional indicator failed before, which probably would work at least 50% of the time. If it's on a 15-minute chart, the percentages are probably higher. Let's do an experiment here. This was saying, I just low leverage this. Now I am going to on a little dip here. You want to see if a 1 minute directional indicator works? I'll low leverage it just to see if it plays out. I know a 5 minute didn't work. A 15 minute is infinitely stronger. And right now, no indication that we're near a bottom. But I have it set up on 1 minute. We'll see what happens, whether I'm going to trade it or not. But at least give me something to do and test out a very short-term chart. And I cut the leverage down in half. I know a lot of people like to scalp. Oh, that's missed it. Well, it would have worked. Couldn't click on the clicker fast enough. Well, let's see how this would have worked out there anyway. It's going to look at a 1 minute chart here. It knows I haven't clicked yet. So let's just look elsewhere. 5 minute chart, nothing yet. 15 minute chart, bearish but 2 green candles. And 1 minute chart. Now, I would never ever suggest using a directional indicator on a 1 minute chart, because it's the most fickle of all charts. But if you want to buy, for example, good indication, if you want to buy and go long and pick a bottom, and you can't find a reason to do it on a 15 minute chart or a 5 minute chart, you could go to a 1 minute chart. In this case, it's proving to be at least it made a few pips anyway. Not enough to hit a target, by the way. Yet. Let me run back again, because this was Michael's trade, and really a fantastic trade. And I believe he went to a 1 hour chart on Canada yen. Saw the blue lines here. Believe his stop was above here. It's turned out to be really the preceding line ahead of this low here. Perfect place for a stop, trend line, boom to the downside. Someone wants to tell me what they're trading right now, or what we should look at? Here's the euro in case why you don't jump on a 1 minute chart, although it would have given you about 5 pips to the upside. And here it is right now. Just looking ahead, by the way, tonight we have, after the close, we have some earnings from the big tech companies. And that's going to go a long way in determining whether stocks continue to slide on earnings concern and the market goes into a risk-off mood, which often favors the dollar. In this case, it's favoring the yen. With the weak currencies being the Canadian dollar and the Aussie dollar. An Aussie CPI comes out today. So I just showed you how this worked on a micro basis. Still hasn't been broken. But that's all it is a micro basis. This was the move here off of this directional indicator, which does show that it works on all time frames. And here's the euro 5-minute chart. And the 15-minute, which is really giving the best indication of a move. It's far away here. Over 110 from breaking this preceding line. So even on a 5-minute chart, I would have had to put my stop above right here. So you already want to sum it all up. Key to trading, key to using AT is don't ignore a strong move. Look for confirmation from a 15-minute chart, at least, to pick a bottom or top. Although you can do it more aggressively if you have a view and if something's a correction. And always use preceding lines as your stop. So here we are, we're coming really close here. This could form another directional indicator. I hate to play it again. This is your 15-minute. This will be a directional indicator another 10 minutes. And if we go back to what we discussed before, we never got that bounce in euro sterling. We were trading about 58 or 59 before. We're now at 55, but your stop would have to be above 75. So we're talking about a profit somewhere down in here. Here's your euro dollar 5-minute chart, okay? And I hate to be picking a bottom here, but I can't sell down here right now. I'm going to show you something else that I found. If you look at this chart, can you see this large wick here? Not large, by relative terms. where the body comes back right here. There's very little body, but a large wick. That usually either that's on a especially on other charts. This is often an indication that there were many stops run and a failure if it comes back within the body. So when you look at candles, and I've never used to trade candles, you'll often see these large, relatively long wicks with a small body, similar here, which tells you there's no follow through on that move. You know, we'll go through that at other times. I'm just looking for a trade right now. That is an AT trade. Here we go. I got a question. Okay, no. Once again, we're getting a directional indicator on a 5-minute chart on the Eurodollar. Now, the whole question is, given the strength of this move, do we play it? Eventually, it's going to work out. But when you bounce, you're probably going to run into sellers. As I said, a 15-minute chart on a strength of a move like this is a much better play than a trying to pick a bottom off a 5-minute chart. Well, I got a question. The question is, you know, you highlight directional indicators by themselves. Are they triggers for a trade? And if so, when to use the 5-minute, when to use the 15-minute? You know, directional indicators by themselves are just one indication. Very tempting to put on a trade when you see one. It works best when it's one that comes off a correction, meaning that if you're in a trend, the market corrects to a new low of the day, you get your directional indicator. And once that low is in, you can anticipate a stronger bounce back in this case to the upside. The other point with directional indicators, if you can find something else, maybe an older line, a whole bunch of resistance below or above the high low of the day on a longer term chart that tells you the market's running into a tough area, then a directional indicator is really a something you can trade probably on a 5-minute as well as a 15-minute. Problem with the 15-minute, sometimes it takes a long time, but you know, patience often wins out. You look at right now, we're trying to form a directional indicator in the Eurodollar, but everything else is pointing to the downside. So to take a shot there is kind of a leap of faith that the market's going to run out of steam. Because if the directional indicator doesn't hold, you're going to take out stops below the low of the day. So in this case, I would say probably it pays to be a little patient. And see how this develops. And if I got one on a 15-minute chart, I'd probably jump in and do it. But right now, it seems all about risk off and interest rates. And today, unlike yesterday, German rates are now following and keeping pace with US rates, which are lower as well. Okay, here we got our directional indicator again. Which is so tempting to try to buy. As we hold down here another candle, we're going to get a unconfirmed line on a 15-minute chart. Right here, we do have a directional indicator, but we got to take out this preceding line. So as long as you take profit is below this preceding line, you have a shot at getting it. Look at a 15-minute here. I'm only focusing on the euro here. If you have another currency to trade, let me know. Well, this has worked a few pips anyway on euro sterling and that directional indicator. But I said my stop would have to be above here. My take profit would be all the way down here. I'm not sure that's achievable today. But you can see the principle. We are on a bounce here, and we have not gotten that bounce since we broke it. If we had gotten a bounce in here, I would have put on a short. But we have not had a bounce since we broke that preceding line. Go back to the euro. It's trying to form a bottom, but it has no bounce to it at all. Let's look at S&P. Michael likes to say that S&P tends to rally at the end of the day, but I think it really depends on what the earnings are after the bell. Canada trying to form a top. Would play a directional indicator if we got one here, but that's going to be a ways out. The other weak sister, Aussie, also trying to form a bottom. Good for 15-minute charts. But no AT trade confirmed here. Here's the euro. Holding that directional indicator. I'm not getting anything on a 15. But on a 5, it's starting to look like it could come into this region here. So let's see what happens. I mean, you see the formation here. Been trying for 15 minutes to break this amazing trader line. But I said I feel much more comfortable if we could get a confirmation on a 15-minute chart. Then I might take a shot. If not right now, we can't even break this blue amazing trader line. I just have trouble chasing at these levels to go short. If you could tell me what you're trading, we can look at it as we look at the market here. And I avoid getting sucked into this directional indicator, as tempting as it may be. I mean, you look at this chart here and you see yourself, why in God's name would I possibly looking to buy? Then you're 100% right. There was an opportunity right in here that didn't hold. And once again, we're trying for the same thing. And that's why I guess when you have a strong move off a ladder that forms off the high of a day, in this case, we had several attempts in the euro at least to pick bottoms and they go bid, but none of them are following through. So here we just nicked this line. This low is still in. But right now, no amazing trade to trade. Let's look at the Canadian dollar. Again, you got all these red amazing trader lines. So you would have to have something conclusive to go short. And that would have to be on a 15-minute chart. And again, 5 minutes did not hold. Market is targeting somewhere between 109.80 and 109.65. And that's the beauty of the amazing trader. Look how this on a 4-hour euro dollar chart, the market targeted over here. So a good lesson today, if we could take one away from here as we still watch this market, is that when you have a very strong move like this, no matter how tempting it is, and there are times when it might work nicely, and I've seen it work many times, but better to wait for confirmation, or at least a 15-minute chart probably to go long or short, or at least to confirm what you're seeing on the shorter term time, like 5 minute or 1 minute, because you're going to get some signals from the amazing trader. But what we've learned now, and I learned again today by just probing it, is that getting confirmation from a 15-minute chart really is a much stronger indicator and much stronger to trade without the noise than going to a 5 or 1 minute chart. And I like trading the shorter term charts, but you can see here that this is a very strong move to the downside. So I would love to hear a currency that you're trading, because I'm trying to be as patient as possible and not get sucked in. Wow, the hour's almost gone here. So as I said, the takeaway here is if you're looking at the euro dollar right here, 109.65. Why is it important? It's of course 2 time frames. You got the 1 hour and the 4 hour. And let's look at the daily. The daily is much lower, 109.30, I believe it is. Why? That's the preceding line ahead of this high. Okay, so look, unless you have a question, I'm going to wrap it up. Wish I was on a little bit earlier. But I said, if you want to take away from here, focus on the 15-minute chart. You can get confirmation on a 5-minute chart or a 1 minute chart. But if the 15-minute is strong like it is here, and the 5-minute shows something else, just sit and watch and see if the 15-minute starts to confirm. Because you can have discipline, and trust me, I have a very itchy finger, and I love to pick bottoms and tops. I probed one earlier, but they're low percentage trades unless you get confirmation from the amazing trader. As I sit here and we continue to move lower, probably towards that 109.65 target, which I didn't think was achievable today. Okay, well, that wraps it up. If you have any questions, you can just email us. Good trading, and we'll see you tomorrow.